I'm delighted to be joined by James Harries, manager of the Securities Trust of Scotland. Welcome, James. So to begin, it would be great if you could outline how we approach investing at Troy and more specifically what you're trying to achieve with Securities Trust of Scotland.
Yeah, so we invest in a concentrated portfolio of exceptional resilient businesses, which we think can compound capital and income over the long term. We tend to produce above average returns with below average volatility. And both of those things matter. Of course, the return matters, but also low volatility. We think this trust is particularly attractive for people with irreplaceable capital and in need of income. And those two things tend to coincide in retirement. And of course, when you're young, volatility is your friend because you've got plenty of time to recover if you suffer a steep loss. But when you're older, that isn't the case. And so delivering a return with low volatility is important. And finally, we want to be investing in companies that are both lack capital intensity and lack cyclicality. And that means that they can pay the income with genuine free cash flow. So ultimately, what we're trying to be seen as is the quality, low volatility, global equity income trust in the sector.
Quality is obviously in the eye of the beholder. Could you expand a bit on what quality means to you, especially in the context of income investing?
Yes, well, the hallmark of quality for a business is to be able to generate a sustainably higher return on invested capital. Certain businesses are able to do that because they have particular attributes. They have good brands, they have strong distribution, they have pricing power, whatever it might be that allows them to create a high and sustainable return on invested capital. In an income context, that also enables them to deliver return both in terms of capital and income, but it still means that although we are investing for income, we still want our businesses to be high quality.
Do you find these qualities more prevalent in certain sectors?
We do. So at Troy, we try and concentrate our portfolios in particular companies and particular sectors which have these attributes which I mentioned. Because if you invest on a broader range of businesses, what you're actually effectively saying is that all companies are equal. It just comes down to the price you pay. But that's not actually right. Some companies are inherently higher quality. They generate higher returns on capital. And they tend to reside in areas like consumer staples, in healthcare, in information technology. And conversely, they don't reside in other sectors like chemicals, construction, telecommunications, utilities. And what's interesting about that is that some of those sectors are sectors that one traditionally would have invested for income. And yet now we think that actually because of the low quality of those businesses and because they're being disrupted, they should now be avoided. So yes, we try and concentrate in particular areas of the market.
Thank you, James.